Well, hello, everyone. My name is Diana Lum, and I'm with the Greater Issaquah Chamber of Commerce, and I'd like to welcome you to our Business Solutions webinar series today. Thank you for joining us. You know, every month we bring local experts to you through our webinars. We're addressing top of mind issues and providing solutions that help your business grow. These webinars are proudly brought to everyone in the community at no cost, and they are all recorded so that we can build up our resource library for you to access at any time. You can find more recordings, this recording as well as other recordings on our YouTube channel. So I hope that you check that out. Today we're thrilled to have to feature David Cornick. David is our branch manager, vice president at the local Key Bank on East Lake Sammamish Parkway. He recently shared with us his philosophy as we had these conversations about today's webinar, and his philosophy as it relates to doing business and taking care of his customers. David takes a very individual approach with clients. He knows that every situation is different and should be treated as such. He believes there's no one right fit, and that being creative and being thinking out of the box benefits his clients. Using this approach with his clientele allows him to treat each interaction not as a transaction, but as a relationship. This philosophy is key to his success and supports the type of partnerships that grow and can pivot, especially during fluid markets. David has 25 years experience in the financial banking industry. He has built and managed high net worth client portfolios with Bank of America, HSBC, I always struggle over that, HSBC Bank, and has served in many leadership positions as well. David has an extensive knowledge of current market trends on both the consumer and business space, and that is why he's been invited to present to us today. So David, again, thank you for being here. Thank you for giving your time and your expertise, and I will now turn this over to you.
Thanks very much, Diana. It's my pleasure to be here, and hopefully I can bring some knowledge and some insight and some hope of direction, especially in the times that we're in right now. I'm going to go ahead and just pull up the PowerPoint, and then I'll just kind of walk through it. Typically what I like to do is spark questions. So what I'm hoping is that what I'm sharing, for some it might be, old hat, others who are just starting out, which I've seen actually in Issaquah in the greater area. We've got a lot of brand new businesses that are opening up. So that's exciting. It's good to see the growth. And so hopefully what I'm doing here is actually going to help out with those new businesses and maybe those seasoned businesses that just need some additional, direction or tips on it. So I'm going to go ahead and share. Whoops. Let me just make sure. Are you able to see this at all? Let me just make sure that we're gonna. There we go. So hopefully you all can see that. Thank you again for the very nice introduction. Again, my name is David Cornick, and I am, as she mentioned, I have been in banking industry for 25 years. I started as a teller, and I was able to work my way up through different leadership positions. I've been fortunate enough, or maybe not, to have seen several different economic downturns as well as upswings. And so I've been able to feel those, work with my clients through those, and grab some experience around them. I think that my knowledge is where I can share what I've seen, and what we're going through right now is going to be a volatile market, probably in the next 2 years or more. My experience also, I've seen that people who are willing to embrace it and look for opportunity are the ones who will, in the end of it, succeed. Those who kind of crawl into a closet and they're not quite sure what to do and they want to see what others are doing, those are laggers, and those may not succeed as well. So I'm hoping again to I'll share some challenges that we saw during the pandemic, some companies that were able to embrace it early on. Some fell into it, and then some were laggers, and they wanted to kind of follow the leader and see what they could do. And what we're finding is that those, I have a couple of examples that come to mind, but those that did that, they're kind of feeling it right now. I was born here in Seattle, was raised here. I'm very involved with our community. I get involved with our homeless community. I think our tiny homes is a big opportunity for us to just give back to the community, especially in areas that they can improve their lives on. It's just such a great concept. And for those of you who have not looked it up, I definitely would encourage you to check out tiny homes. So what I'll do is I'll kind of give a breakdown. Again, as I mentioned, COVID-19 pandemic has brought many challenges, particularly for small business owners who struggled with the lockdown, the labor shortage, and new health and safety protocols, which I think one form or another, a lot of us dealt with, some form of that, whether you're a retailer, a big box store retailer, or a mom and pop front retailer. I think everybody dealt with this, especially the health and safety protocols for our small businesses. They were affected. And they unfortunately did have to kind of follow suit with some of the larger companies to see how they were maneuvering through this pandemic. And ultimately, everybody kind of landed. They landed in a good way, but they all landed at different timelines. Some also realized that maybe they should have been more proactive and maybe not so reactive with their approach. And we'll go through that. And we're also going to talk about maybe some tips, again, as I mentioned earlier, maybe some tips on what you could have done differently, what you can do differently. In the market we're in right now, there is going to be some more change, and maybe I'm hoping that you'll pull one or two pieces out of here that you can incorporate into your company. And then it's going to go over some insights, ideas on how to make your small business lasting during these times. Two examples really quick. I'll just kind of keep it light. 2008, 2009, I had a client. We were going through the mortgage crises, and he actually, while others were kind of hiding under a rock and trying to figure out what to do, he actually took it upon himself to look for opportunity. At that time, people with second homes, especially in Southern California, they were selling their second homes just to make things meet. They didn't need that extra expense or that extra asset, and they were selling it at a bargain. So this particular client I use as an example because he bought a 10-acre property in Maui for very, very cheap in 2008. And it was a leap and it was a gamble, but he also was willing to take that chance, which has ultimately paid off for him. He ended up raising steer on that property, and now he's built his own retirement home on that. But that's an example. Another example of what we're currently in right now is those who fall into it. That's the Amazons. They had a business model that was in place, and they were perfect business model for this pandemic. They didn't have to change too much. They were pretty much right on point. In fact, as we know, their business grew. Then we had other retailers that were starting to slowly get into the online channel, but they weren't as aggressively getting into the online channel like Amazon. They started to ramp up their inventory. They saw the pandemic hit. They started to increase their inventory. They thought all of their sales were going to purely be online, or the majority of them were going to be online. So they boosted up their inventory. But what unfortunately we found now is that even though we're in an inflationary market where supply chain is an issue, they are actually running into inventory issues because they now have too much, because they over prepared and they didn't read the markets and they weren't understanding the actual direction. So while they were doing the right thing for their business, they weren't looking the long term, and they were, again, it was more of a knee-jerk reaction for them. So there's just a few examples on, you know, what to look out for. And I think that no matter what markets, I've seen three major downturns in markets in my career, and there's always opportunity for it. It just depends on how you prepare for that opportunity. Here are some facts. I won't go into detail on these, but a couple that I want to point out is that cash was the most popular form of financing in 2021. Again, cash. So those who were highly leveraged and thought that their lines of credit were going to pull them through the pandemic, actually, and even now more so than before, are getting hurt because we know the rate environments are moving up as well. So maybe they use their capital and they use their lines of credit to get them through the pandemic. Well, unfortunately, now you have to pay that back, and the rates have now gone up. Where those who are actually doing better are those who have managed their cash flow and have used cash and kind of took a small hit, understanding the cash was going to help them in the short term, but in the long run, they still are going to keep a viable business. And then they can certainly, we had witnessed that with the PPP loans and some other loans and lines of credit that we did. So those who were heavily weighted in credit during that time, unfortunately, were affected then, and now even more so that the rates we're kind of in an upward trend with the rate environment. So something, again, looking forward to be cautious of. It's not a bad thing. You want to build your business credit standing up. But on the other hand, you want to just make sure and we'll touch on that a little bit later, you want to keep aware of your balance sheet. Always don't be too strong on one side or the other, and always pay attention to your balance sheet. It's incredibly crucial, and that's going to allow you to be fluid inside of any market that we're in right now. It says 71% of growing small business survived the pandemic through digitization and online space. That's what I mentioned earlier. It was smart. They knew that people were shopping at home. They knew they were doing a lot of their purchasing at home. So to create a digitized space was incredibly important for these companies. However, again, you don't want to lose sight of what your focus is, which is your product, your niche product, whatever it is you sell or whatever it is you offer or do your services. You have to be mindful of that because, again, the pandemic was something that was not seen, not heard of. And so you don't want to lose sight of what your core business value and your core business purpose is. However, you do want to make sure that you are growing with where the direction of other companies are growing at. And you want to stay competitive, I guess would be the quick answer to that one. Salary of small businesses I thought was kind of interesting, ranges 30 to 130,000. That was the average, and that was through the SBA administration. It's kind of nice. So some people, an example is during the pandemic, they turned their side hustle into a job. They actually left their careers and thought that they could do, and they're doing great. And if they manage their business properly at that time, they actually probably end up leaving or reversing roles with what they currently were doing. So again, something else to think about. I'm not going to go through all of these, but those are just some really good stats for us to keep in mind. We kind of touched on this a little bit. These are current obstacles and challenges that we did see in 2000. I guess we can go back to 2020, 21, and a little bit of 22. And then of course, there's going to be some differences. Supply chain and inventory, I touched on that. It's a good idea to diversify your business vendor portfolios. I wish I could have highlighted that even more. That's super crucial, very important. Because again, just like your business, if you focus solely on one and you forget about the other ideas, or you forget to diversify out in other areas such as brick and mortar to then go online and brick and mortar, this is another way of doing that, to where you don't want to have one supplier for all of your product, because we know now with the supply chain issues we're having, inventory issues we're having, it gets bogged up. And now you've tied your business supply up because you've only worked with one vendor. So if I could highlight anything out of that, shop around, look for different vendors, see who else can provide your service or your product. If it's a service, not necessarily, but if it's a product, I definitely would take a look at that. Inflation creates slim margins, and you start feeling the pinch of this. You really do. That kind of goes back into what I was referring to with cash and debt load. One thing to be reminded of is that long-term debt for businesses and even personal, but for businesses is going to weigh out, especially during an inflationary market, such as credit card rates are going to increase. You will see those. If people carry a balance, their credit card rate will increase. Equity lines are increasing. Some of you may feel that right now. Your equity line is typically tied to the Wall Street Journal prime rate, which is a short-term rate, and usually your margins are tied to that. That rate has gone up pretty significantly. We've been through this before, and then you have a margin on that. So that's considered a short-term. Mortgages are more of a long-term rate. And businesses are typically those who are going to survive something like this. Take a look at their short-term and their long-term, and sometimes it will make sense to try to put the two together. We call it a blended calculation, but you put the two together, and really in the long run, you've now stabilized your business. You have the ability to understand what your debt payments are going to be, not 6 months down the road, but 2 years, 3 years, 4 years down the road. So it makes sense to structure your debt properly, especially in this kind of inflationary market we're in. Again, something to think about. So if you haven't looked at your balance sheet, I'll keep referring back to that because I think it's vitally important you have to keep a hand on your business as a small business owner, but you need to know your balance sheet and you need to understand, and you need to be able to take an honest look at yourself and your company. New consumer channels, again, we touched on that, digitalization of it. The social media seems to be popular. I think there's like TikTok and some other ones out there, but however you choose to market your business. But again, looking outside the box and how you market it seems to be where a lot of the winners are at, not just the more brick and mortar advertising companies, to really get creative with how you're advertising your company. Number 4 is a big one, and this one happens, I swear, in all the these downturns I've seen. It's when it seems to come surface even more. Cybersecurity and data protection. That, if you haven't done it already, they will steal your identity, your business identity. We have situations with law firms that have IOLTA accounts that have been compromised. It can be a big deal. And I think that if you haven't invested money into some type of cybersecurity or data protection, I would absolutely encourage you to shop around, find out what works best for you. But I would certainly make the investment into it, because that short-term cost is going to help you out any kind of long-term losses you may incur. And that could be reputational, that could be financial. I mean, there's so many different factors that would fall into having lack of cybersecurity or data protection on your company. So I would certainly take a look at that. Technology is always changing. It kind of falls right into the previous bullet point. Always, there's been several times where I've had people use QuickBooks. And QuickBooks was great maybe 15 years ago, but now QuickBooks has kind of been morphed into other types of software that is better and is more efficient. And efficiency is what we're looking for, especially with small business or even as individual consumers, is efficiency. So look at what your current software is at, look at the technology you're using, see if it's dated and see if it needs to be upgraded in any way. And those are easy fixes to do. But again, it's just a matter of getting it updated to create additional efficiency. Again, QuickBooks back in the day was probably very efficient. Now it may not even work with whatever current online banking or any type of payroll software that you're using. So just I would definitely take a look at that. Hybrid workspaces, that was also a challenge for a lot of people, but as you may have read, we're seeing that efficiency ratios actually have increased with hybrid working model. So it's not going to work with every company, especially if you're a hands-on service business. That's obviously not going to work. But if it's more of a, even in a brick and mortar, if you have you don't necessarily need to have your workforce in the office at all time to be efficiency basis. And so it actually gives flexibility. I did want to bullet point that it gives you flexibility to run your business as well. And it does allow you to retain the right people, because you'll see later is that hybrid seems to be the thing, and that seems to be an attraction, and that's what some of our new generation is looking for, is to have a hybrid workplace. So being able to incorporate that would be huge. I mentioned this early, narrow your focus. I put an example on here. You may have had 50 items on your menu prior to the pandemic, and that was fine. You had the supply, you had the knowledge, you had the skills, you had the employee, you had everything that would be able to facilitate that. But now after the pandemic and things are tighter, it's best just to, again, take a step back and look at what you're currently offering. And can you reduce it down? In this case, I just did the example of taking your menu items from 50 down to 10 and just focus a little bit more on what you're really good at. And then that way you can pivot, but you can work your way through the changes that were happening right now. And it doesn't mean you can't get back to your 50 item menu, but at least currently, and maybe for the next couple of years, try to take a look at it and try to narrow that focus back down again. And it's what we all did, I think, when I would guess when you started your small businesses. To begin with, you had an idea and a focus, and you had that narrow vision, and that's why you became successful at what you're doing. And so maybe just taking that approach would be super helpful. Technology kind of falls back into what I was saying earlier in POS, ease of POS transactions. There's a lot to cover on that, so I won't cover it all, but point of sale transactions, that can be done in a myriad of ways, through online channels, through in-person channels. There's just my only advice or direction on that is be flexible to how your clients want to pay you. So be willing to accept it. It's always terrible to say, no, I can't take your payment for service, because you can't have the ability to accept it. So in that, I would say in the technology, and the demand for clients is different now too. The way that they want to pay is much different than the way we used to be able to accept it. So just be open to, again, change. I think the theme here is just be open to change, because there's going to be a lot of it in the next couple of years. Finding ways to cut costs. As I mentioned earlier, having an honest evaluation of where you're spending your money. And it's very simple once you, for example, I put on here an unnecessary software subscription, shared office space. That is one. Another one that seems to be coming up that I think is very interesting is people who are ready to expand their business, and they're used to paying rent. And instead of paying rent, they're now looking to buy. And there are options out there to now purchase that space as opposed to renting that space. And in the long run, what we're finding, this is actually becoming, again, more popular. People are spending less to actually own the property that they're in as opposed to leasing it. So that's a bigger example, but that is a way of taking a look at how to start cutting cost and running your business a little more efficient. And then marketing trends, depending on the type of business you're in, always follow those. I mean, you can obviously go online and Google it, but you don't want to, it's always nice to be, I think the entrepreneurial spirit is very creative by nature. And I think being creative is why everybody does what they do. So following the market trends is fantastic, but kind of creating your own market trend as well is super helpful, because then you'll be the leader and not the lagger on it. So, but you always want to follow what the trends are and follow what others are doing, so you can at least keep pace and hopefully outperform those. Building a strong team. That one is really, we're at a point where I've talked to a lot of business owners lately, and there's a lot of openings out there right now, but there's also a lot of talent. out there right now. And I think this is the best opportunity to really be, be specific on who you're hiring. Build your team, build your strong team, build the team that you have enough trust in that if you were to go on a vacation for 2 weeks, not everything's breaking down. Build that team, because before, I think sometimes you feel for the body, and that doesn't always work out. But now we have enough talent in the talent pool, and there we can be very choosy with who we want to fill for that. And this is, again, look for opportunity in these markets. This is a great opportunity to really start building out a strong team. Networking is also more so, and I don't even want to say it's just for small businesses. I think networking can be just as much as your friends and your neighbors as it is a formal networking, environment. I think just getting your name out there, it's amazing what people will do when they hear good things about a company. Just, again, it's just talking with people and be proud of what you do. And I think, again, the networking side of it, it gives you also, on, I guess, growing your business standpoint, I mentioned at the bottom there, it's a strong foundation for referral business as well. So a lot of the successful, I think of real estate agents, I have, they build their business off referrals, they build their business off reputation, and they do a lot of networking. And it clearly shows with some of the successful agents that there are out there. Solving the burning problem. So I wrote an example here. Shipping delays during a holiday season are a frustrating experience for most consumers. When packages fail to arrive on time, they left no choice but to wait in anger and disappointment. So think of it and address that from the beginning. Every business has a burning problem. There's always a pinch point. And I think if you can identify, if you haven't already, identify that pinch point and be forward thinking and think ahead about what that could be, then that's going to actually help you out in the long run. It could just be, in this case, how you're shipping, or which company you're using, or are they as responsive as you want them? I mean, it can just be as simple as that, but the good ones actually figure those pinch points out. And then obviously, I think we're all in the business of good customer service. And I think that at the end of the day is gonna be what wins out, because everybody has the pin to sell you, right? But it's who do you want to buy that pin from is who is going to get your business, and probably you're going to get referral business from as well. Just to kind of put everything together, banking obviously is huge, and obviously I've been doing this for a real long time. And as she mentioned, my philosophy is very much individual. And I find it important that not every square peg goes in a round hole. Every situation is different. In my 25 years, I've not encountered, I mean, I can see a similarity, but there's never one exact situation that I've ever dealt with and came up with a solution for. Everybody's goals are different. So in regards to your business banking need, really express what your short and long-term business goals are. Some people, they really do have that goal of building it up 10 years and then selling it. Others want to have it as a legacy business. So really look at what that is and find out how your banking needs are based on those goals. There's some banks that are very transactional, and that could work for you. There are some that are very, as I said earlier, very legacy driven, and they want to see your business succeed now. And they want to see us help you grow with it 3, 4, 5 year, generations down the road. I should have put it at the beginning, but interview your banker. Talk to your banker. Make sure you really feel comfortable and interview them. And my caution is, don't just go to the bank for the bank. Interview the banker, because you really want to have a nice relationship. You not only do you want to find out what they can do for you and they understand your goals. I mentioned in here, you want to know if they have experience. Do they have knowledge of your industry? Can they put you in touch? Can they, we mentioned earlier networking. Can you get them in front of the right folks? Is there a way that you can work together and it's not one-sided? I refer to Allstate sometimes with hands out. We want to make sure it's a two-way street as well, and want to make sure that the relationship works. So see if they have industry knowledge of what you do, and if that's important to you, then definitely interview them. It's your choice, 100% your choice on where you want to do your banking. And business banking is much different than consumer banking in that the pieces are a lot more intricate. The pieces are a lot more detailed. There's a lot more that it's involved in business banking than maybe a consumer relationship, a basic consumer relationship. So find out their experience. What do they know in different areas? And don't be afraid to ask the hard questions, because I think in the back of your mind, you know what you want to ask. You just sometimes can't relay it on. So hopefully that comes through. I put in there in-person online needs. That's just an example. And then cash flow and types of financing startups. One thing, like I said, I keep referring back to it. If you take anything, just take away an honest to look at your business. Really do. And look at your balance sheet. Some people see the money coming in. Some people will see the checks that go out, and they'll see a positive in their checking account and they think life is good. And sometimes you have to really take a little bit deeper of a dive. And candidly, that's when you talk to your bank or talk to your CPA or talk to somebody else, talk to a third party who has knowledge in this and can kind of say, well, actually, you're kind of doing a little heavy here or less there. But at the end of the day, I think everybody can get through it. The bottom line here is just be willing to take a risk, look at the opportunities, and don't be willing to make change, because I think right now change is where it's at, and just reach out to experts that can help you out. So that's what I've got for you. I just want to thank you for the invite. I truly appreciate it. It was my honor, and I'm always available. So if you guys have any questions, let me know.
So David, thank you. David, can you hear me okay?
Yes.
Okay, great. So I want to thank you for your time and your expertise. This was fully packed information. So thank you for that. It was great information. And I can see in your presentation and your advice absolutely how that aligns to your personal philosophy. So it all came together. You guys, if you do have any questions, feel free to go ahead and add those to the chat or the Q&A, and we can get David to answer that. I have a comment that you did a great job, and to thank you, David, for that. So no other questions seem to be coming through. If nobody else has any questions, I think you probably answered any question that possibly
may have said thank you a little too much, but hopefully
no, I think it was great. And I do want to remind the audience as well is that this has been recorded, so go back to our YouTube channel and take some time to go through our resource library. And in the next couple of weeks, this will be on our YouTube channel, and you can go back and revisit some of the talking points that David shared with us today. I do have a question though that came from Matthew. How much longer do you think interest rates will rise?
Good question. So they're anticipating the short-term, well, the prime rate. The analysts are saying it's going to go up another 3/4 of a point by end of September. So that's going to put prime rate roughly, well, not roughly, it will be at 65. If they go up the full 3/4% increase. I don't know exactly what we can say as far as like 2 years from now, but the 10-year treasury, which is a good indicator of long-term rates, and that's oftentimes what your mortgage rates are based off of, is typically the 10-year treasury. So keep an eye on that. Even though we are in, as I mentioned earlier, a short-term increase for short-term lending, long-term lending is on the 10-year treasury. So if you want to kind of do a market look at that, even though we had this jump, the 10-year is kind of up. I mean, we're not going to ever see, it's a great question, we're not going to see those 2-3% rates that we had before. Historically low, and I feel like it may not, unless there's something that happens. I don't think we're ever going to see those kind of low rates again. But I think where the 10-year is at right now, roughly 4 or 5%, I think that that's a kind of a little bit better of a benchmark to do so. But if you're going to look at anything, maybe the next 2 years is probably when it'll, I can't say when it's going to end, but I would just say keep an eye on that 10-year treasury and the prime rate. I think 6.25 is about what we're going to see at least through end of this year, maybe short, if anything, they might drop, but no. Yeah. So hopefully that answers that question.
All right, and I believe that is all of our questions. Again, David, our thanks to you for being present today, and for KeyBank for allowing you to come and visit us today. And